Hello everyone, this is the trading team at Trade Oxygen here. Welcome to another post-market analysis. So this is for the Monday 8th of October 2024. This is for the micro E-mini NASDAQ index futures. So if any of the terms we mention here are not clear or if new to you, don't worry. Subscribe to the channel and click the bell icon. We will release simple videos soon explaining each of these terms and concepts. What we want you to do now in this video is to see and feel how we analyze the markets and to understand that you can trade with a proper logic. Also keep in mind this is not licensed investment advice. This is for education purposes only. Okay, so looking at the economic calendar for the day, you can see there were no high impact news. So there's medium impact news. Usually we would love to see high impact news as well around. However, let's see how the day went during the day, the trading. Okay, so looking at the 4-hour chart, you can see the price was making higher highs in this area, and then it's like higher high, higher high, higher high, and then it started making a higher low and a higher low, and then with these candles down, you can see it with the large displacement, it broke this low over here. So basically in this area it was in like a uptrend. It was in uptrend, but when it starts making lower highs over here, so when it started making lower highs and with this displacement, this when it break this low over here, so that gave us a bearish bias for the day. So why once again, why is it a bearish bias for the day for Monday? The reason is when it was an uptrend over here, then when it was making higher highs, as I said earlier, and low higher lows as well, right? Uptrend. But then all of a sudden, when it starts making, I'm repeating the same thing what I said earlier because then you can understand. When it starts making lower highs and lower lows, and when it break with displacement, right? That is what gave us confidence. Displacement, it breaks this low over here. So then we could anticipate the price to be bearish for some time period. So that's why we were bearish. And then over here you can see it made a fair value gap, 15-minute fair value gap. And then in this over here on last week, Wednesday, Thursday, Friday, you can see the price made. So this is the bearish leg. Then this part is the retracement of this bearish leg, this displacement. So there's a retracement, right? In that retracement, you can see it's again making higher highs and higher lows. So when it makes these higher lows, for us, the trading team at Trade Oxygen, we look at this as liquidity pools. So, and we are bearish overall now. And when we see it making these liquidity pools, higher highs and higher lows, and if we are bearish, and when the price came to this 15-minute fair value gap and the 1-hour order block, right? And once again, if any of these terms are not clear, don't worry, subscribe to the channel, click the bell icon. We will release simple videos, and also we will release the 2024 updated full version of course as well with all the concepts. So stay tuned and be patient until that. For now, understand how the market works. So then when we see this, the team at Trade Oxygen, when we are bearish and when we see this, we consider it as a low resistance liquidity run. And then what we did during the day was to see if there is any signature for us to go in a bearish entry, because our bias is bearish for the day. Also another thing, when it made this swing high, you can see this bearish candle. Now if I just maximize this part, because now we are focusing on this part to take a trade somewhere here. You can see this bearish candle is very strong. So when it reached the order block over here and swing high made, and when you see a huge bearish can push down, that is again displacement during the retracement, and when it break let's say this candle's low, it gives us some idea, some clue that the price is now looking to be bearish, because overall bias is bearish. Now in the retracement we can see the retracement is now trying to uh, make a bounce from here and to, let's say, to continue the bearish trend down, right? So we get that clue from here, and during the day, this is the day, this area, we were looking for any clues to see if we could go and take a bearish entry. Also looking at the fib retracement from this price leg to here, you can see we have already put it. When the price during the retracement leg, you can see you can draw it in a couple of ways. Let me show it. So when we draw it, you can see at when the market like started for the day in this area, you can see in this retracement leg, now we are expecting the price to go down, but we can see with this push down, it almost reached 50% of the fib retracement tool. But there's a chance that it could go down up to, let's say, 60 to 70%. Why? Because of this low resistance liquidity run we are expecting here, because there are sell stops below these points, right? So you can see there's a sound logic when we trade, right? So when we trade with proper logic, you can expect a return, like a profit in long run. That's how trading works, right? Okay. So we need to trade with a positive expectancy, and we need to improve our hints and clues to take a trade. We need to see how the probability improves. So these points gives us a high, our probability increases, winning probability, right? So and with all these clues, what we are looking for now is a bearish entry during the market. For that we have to go to low level time frame. So now let's go into the 1 hour time frame. Also, just before we go down to the 1 hour, in the 4 hour, you can see, if you consider this swing low and this displacement breaking that, meaning we can see a break of structure down. Also, if you consider this swing low, right, and this push down also broke that. So that is also the break of structure in the 4 hour. Not only that, if you look at this swing low, you can see this push down even broke that as well. So what that also tells us is there's a break of structure bearish down. So that is another reason why we, the trading team at Trade Oxygen, were looking for a bearish entry in after this retracement. Why? Because of what all this tells us, and what I said earlier tells us, is the market is bearish. So we need to nail down whether the market is bearish or bullish for the time frame we are trading, and then only we should look for the trade entry. So now we are looking for the sell or sell trade entry, but we need to look at the footprint to see whether we can see it. For that, let's go to the 1 hour chart. So now we are in the 1 hour chart. Again, you can see in the 1 hour chart, if you look at the last few days, you can see this push down, which is also what we saw in the 4 hour. You can see that push down. You can see it supports this break of structure down. So basically, even looking at 1 hour, the same break of structures are valid. So what that means is, from this price leg down, from here onwards, we are looking now for short entries. Then you can see in the 1 hour there was a range build up, and the price broke up on last Friday, and it came down back, rebalancing that. So it's already balanced, so we don't pay much attention for that. However, you can see at this point, if I just draw it again here, at this point in the 1 hour, let me show it to you. Let me take the tool and draw it. So you can see in the 1 hour in this area, now when we are looking for a bearish price action and entry, you can see it made higher high, higher lows, but then from here to here, see it made a lower high, lower low. So that because this low is now lower than this, so it makes a lower low. Up to now, from here to here, it was making higher lows, but all of a sudden it makes a lower low, and this price leg, when it goes down passing this point, it's a break of structure in 1 hour. So now we are starting to see signs in 1 hour chart supporting bearish, because the break of structure is down. It breaks this low from here. Now we got support from 1 hour to tell, okay, the market is probably making a turn here because it was retracing up to here, then it's probably making a turn. Now 1 hour also gave us a break of structure down, bearish. So, and it comes with some displacement. You can see some strong down candles. So that also supports our idea at the trading team at Trade Oxygen to understand the market is bearish. Then what we do now is we were looking for entry in the New York Open, right? Let's see how we tackle the entry in the New York Open. For that, let's go into low level charts. So now we are in the 15-minute chart. This is that price leg we saw in the 4 hour and 1 hour. But now we were then talking in the 1 hour this area, and this is the 1 hour break of structure down. So now we are in the 15-minute looking for a bearish trade entry, right? So this is the New York Open over here. Let's see how we tackle this situation. So in the 15-minute chart, when the break of structure, 1 hour break of structure happens, now we are looking for a bearish entry. So this is 9:30 open, New York market over here. We can see the price was making a retracement in the 15-minute, right? Market is fractal. So you can see it's now making a retracement in the 15-minute. And in this price leg down, where it make the 1 hour break of structure, we can see there is a fair value gap here. And we can see it has made a just below the fair value gap, we can see some buy side liquidity here. What that means is, for us at the trading team at Trade Oxygen, is there's buy side liquidity and a fair value gap. So the price will go and try to imbalance this fair value gap. So that's what the price is doing here. It's retracing and coming to that fair value gap. And in that, it's taking this buy side liquidity and reaching the fair value gap. And after that, when we see this big black candle over here down, engulfing candle, that gives us the hint, okay, it's a supporting clue that the market could be bearish here. Okay, so those are the important points what we notice during the market. So when this price action happen here, now if I look here, if I just slightly do like this, so when a price come and imbalance a fair value gap, and when we see hints of price going down, we anticipate with overall scenario mentioned up to this point, bearish scenario, we anticipate this to be an intermediate term high, and we anticipate the price to respect this intermediate term high. What that means by respect is we expect the price to go down without going above this swing high, right? That is what we expect with the narrative we explain up to this. So now, because it's an intermediate term high, now it gives further confidence to us to take a trade somewhere in this area. However, for that we have to go to low level and see how the price action works. So now let's go to the low level charts. So now we are in the 5-minute chart. This is that area in the 5-minute chart. We can see the price came as in the retrace, 15-minute retracement, right? The price came all the way, and this is where we notice a displacement, right? With the displacement candles, right? And also in that displacement, we notice a fair value gap here from this candle's low into this candle's high. We can see there's a fair value gap. So when we notice a fair value gap, And also when we notice a order block, this green candle, again, if you are not sure of this term, subscribe. We will release videos on explaining these terms. So then what we expect for the price to do is, when the price come down, making this fair value gap and the order block, when the price makes swing low, then we now we understand that the price is near intermediate term high, as I explained earlier, and we understand the price is showing us bearish signals. And now we see the price and the 5 minutes also showing us a bearish signal with displacement and fair value gap, order block. So those are all clues for us that this is going to be a strong sell entry, right? And then when we take the entry, this is the entry we placed. If I show it to you, this is the short entry. This is where we put a sell limit order, where the order, the fair value gap starts. We put a sell limit order, and we basically put our stop loss above the candle which made the fair value gap, right? And we expect the price to respect a midpoint of the order block. These are all sound logic, sound theories. We will release the 2024 updated course for you, the full course. So then you will see that all these theories I explained clearly. Subscribe and wait until we release the course as well for you. So we expect the midpoint to be respected, right? And then we place our sell limit order here with this and expecting starting 1 to 2. However, when the risk to reward plays, we take partials, as you can see here. We will be taking partials, but you can see when we took the trade right over here with initial 1 to 2, where we were targeting the sell side liquidity down here to take profits. However, we can see there's sell side liquidity down here as well. So we did not take all the profits here. We took some of the profits here, and then we let the trade run down until it captures the rest of the liquidity down here 1 to 3, and we left little bit to run as well. So some of the trading team members at the Trade Oxygen, they took this trade, right, and they grabbed some reasonable profits. So this is how you need to trade, and trading has to be done with a sound logic like we explained to you now. So this was the profitable bearish trade entry, and this was the full breakdown for your analysis, for you to understand how we took the trade. So the most important thing for you to understand from this analysis video is trading can be done with a sound logic, and it's not very complex. It's simple as long as you know the basics. So expect for us to release this updated 2024 full day trading course if you are a beginner, and if you have some knowledge, we'll also release our professional day trading course as well for you guys to grab it, right? So until that, subscribe to the channel so you know when we release those videos for you all to work on this. Hope you all enjoyed this video, and we'll see you in the next market session soon in a couple of hours. Stay safe until that. Take care.